Hello, hello. Welcome back to the Trading Triangle once again. How you doing, Kay?
I'm doing great. Happy Sunday to everybody.
Yeah, happy Sunday. It's a bit miserable here in the UK, a bit different to last week, which was nice and sunny. What's it like? What's it doing there?
It's a little chilly today, but it's sunny. So as long as the sun is out, it's not bad.
The sun is out and the people are out. That's always a good sign. Of
Exactly.
course, we're just a couple of guys looking at the charts, and it's not financial advice. We just love to do it, and hopefully we can get a bit of kind of know-how from you guys as well. So, I can hear feedback. Are you playing this in the background?
Yeah. So sorry about that.
You distracted me there, Kay.
Yeah.
No worries. Thank you once again to Wolf and Actually's platform. We really appreciate it. And of course, as always, put your tickers down below in the comments. We'd love to hear them. We'd love to see the new tickers as well, not just the Mag 7, etc. So keep putting those tickers, and we can get to those a little bit later on. Let's have a look at the chat, see what's going on. We've got hi here from Talali. Hello. And yeah, without further ado, we'll get back into the spreadsheet, which is actually a slideshow. Oh, there we go. Well, I mean, last week it felt really green, but actually, if you look at the numbers, the SPY and QQQ actually wasn't that green. It's quite flat on the week. But throughout the week, I don't know if you felt the same, Kay, but it felt quite nice. Obviously, you can see that represented on the screen here. Lots of green squares and oblongs, of course. But yeah, what were your feelings on the week overall?
I think overall it was a pretty flat week, I would say. So if you were a day trader, I think you really enjoyed the week because you would be able to scalp. You can be doing day trading. But if you are just a long-term investor, you probably did not see much impact to your portfolio. One day it went down a lot, next day it came back a little bit up. And that's exactly what you see. You're up like 2%, 3%. Some of the stocks, like Nvidia, was actually up throughout the week. And then after they did their GTC event, it actually went down and actually then came back up on Friday. So we're pretty much, flat, 0.8%. So nothing great. Even on the overall SPY and QQQ, you will see the similar numbers, pretty flat around. I think the market has mostly turned towards, it's a very news-driven market now at this point in time.
Yeah, and tariffs.
So every day something comes out. And we actually have a lot of activities happening from this week and the following week. A lot of interesting news. So
yeah, obviously we had the FOMC meeting on Wednesday as well, and obviously the rates were unchanged. I think that was to be expected, wasn't it? I mean,
it was expected.
Not too surprising there. Be interesting to see what happens in the next meeting, whether that is. But we can see some numbers on the screen here. Obviously, Apple up 3%. We'll get to that a bit later on. I think that's Kay's pick for the day. Pick for the week, should I say. And obviously, Microsoft up 3% as well. Flat for Nvidia, Google, and Meta pretty much, and Amazon and Tesla. So yeah, a flat week overall. So we'll jump into this.
Before you move, last week you picked up Uber, I picked up Nvidia. So you apparently you won because you were up 3% for the week, and I was down 3% for the week, or 0.77. So let's make that clear that you won on the Uber trade.
I see. I've got some different numbers here. I've got plus 5% for Uber, and I've got minus 4%.
Okay, great.
So I beat you by 9%. So that's one week for me.
Yeah,
we'll have to get like a little tally going, I think, from now on. So,
but the problem is I don't always provide you a weekly trade. Sometimes I provide you swing trade. So
that's your fault, isn't it?
But for last week, Nvidia was my weekly trade. I did not know that Nvidia would be trashed after the GTC event.
No, of course. Well, with that, we'll move on to the next slide. And what we have is the fear and greed index. We're still sitting in extreme fear, believe it or not, which makes sense because we're basically unchained on a week. Obviously, we've got SPY up only 1% and QQQ basically flat. And again, the same with IWM. So, yeah, pretty much a flat week overall, even though it didn't feel like that for the week, as you just mentioned. Do you want to talk through some key events for the week there, Kay?
Yeah, absolutely. Yes. So Tuesday's going to be a pretty interesting week. We'll be getting the consumer confidence index number, and I think that will play a big role on how the markets react. It wasn't a big deal maybe last year, but I think now we'll have a little bit more impact on it. We have the jobless numbers coming out on Thursday, and then the big one is the GDP, which is supposed to contract as of the last week when we heard from Atlanta Fed that the GDP will contract quarter over quarter. Let's see how that plays out. But those are the big events for, at least I'm watching for the coming week.
Yeah, we've got a comment here from Buzzy, which is a great name. Can you comment on the nuclear stocks that potentially will help power data centers? So I think one's called Oklo. Off the top of my head, I think they do earnings, I think, on Monday night. So it'd be interesting to see. But I don't have much in the way of comments of how they help power data centers. Do you have anything along those lines?
I don't have anything specific on that. I do know that I have added it as part of a watch list. And couple months ago, I think it was, I would say, the last quarter of last year, the fourth quarter of last year. I think it was pretty much just running up, especially when Amazon was looking to, I guess, buy a nuclear plant. There were a couple other ones as well, so there was a lot of buzz around it. I think it will have this wave kind of a flow with the nuclear reactors and the energy stocks, because I think you definitely need energy to support all the data centers as they are building out. But I don't know if I am ready for that trade yet or not.
I think we'll add it to the list. Just if you add OKLO, we can have a little look a bit later on.
Sure.
Because I'm interested in that one as well. I'm not too sure what the price action is lately, but of course it's interesting to see what will happen moving forward, or what we might think might happen, should we say?
And
go ahead. I was going to say, obviously, we do have that on after close on Monday as well, Oklo, which is worth noting. Nothing on this page really takes my attention. I know there's one for you, but I just was reminded of Microvision. Do you remember this stock back in 2020? It took off. So I've just written that down, just do a little bit of due diligence into it, see if it's actually changed in the last 5 years. But yeah, I'll let you have the floor with the earnings here.
Well, I think not much is going on. GameStop on Tuesday is no longer the same GameStop it used to be. It's not fun. Meme stock were the days, right? If you were in GME and AMC, those were the days, right? The only stock that I'm personally watching, and I think Angela wants to know as well, is Lululemon. So we'll cover that during the audience request. Lululemon, honestly, for me personally, has been a big winner over the couple quarters. We did see a lot of decline recently because of also consumer confidence, getting hit. We are seeing across the board, even for Etsy, we have seen the traffic has gone down from buying or people purchasing on Etsy, just the foot traffic, online foot traffic. So very interesting to watch. Lululemon, by the way, last quarter did say that they are raising their target for this year. Let's see if they stick with it or have those numbers change. Very interesting to watch. So Thursday, that will be a close watch for me.
I think that will coincide with the consumer confidence as well, wouldn't it?
Yeah, exactly. Yeah, because, by the way, so if you think about Nike reported earnings last, I think Thursday they reported earnings. Pretty bad earnings, nothing out of the blue. We know there's a new CEO. He's putting things in place, new strategies and everything, but that will take at least 2 to 3 quarters to materialize. So you'll probably see Nike having some kind of a boom in fourth quarter, but at least for the next 6 months or so, Nike is going to be in a very tough spot.
Exactly. One to watch, though. Definitely put it on your watch list for potential growth in the forward coming months. Of course, we'll jump into the charts. This one is SPY, but before we do that, make sure you put your ticker requests down below in the comments, whether it be on Twitter or obviously YouTube as well. Keep them coming in. We've got about 6 or 7 already, which is good to see. So yeah, keep them coming into the comments. And with that, we'll jump into SPY. I've got a bit bearish at the moment, just to kind of go against what I normally say. I normally go quite bullish. So what you can see on the screen here is actually the daily chart for SPY. I'm not saying I'll go down here. I'm just saying there's a point of interest if we were to take a downside move. So obviously we've got a bit of a bear flag kind of forming here currently for the SPY. If we do, obviously we had a nice day on Friday as well, a bit of a kind of retraction back up to this sort of, what are we on, 564 level-ish?
Yeah, 564.
So if we take a little bit of a tumble down, of course, it's another 5%. It's not too bad, down to kind of 536. There's a tiny little gap here. We can't really see it on the screen because obviously it's quite zoomed out, etc. There's a tiny little gap there. So that's the kind of point of interest that I have for SPY. Of course, if we do kind of go the other way and we keep going upwards, I've been saying it for weeks, we've got 582 here. Of course, it is the other side of the 200 moving average, which is not great. It's not that easy to get through that moving average, of course, as everyone knows. And then my final point before you say it pretty much is the 50 moving average is slowly creeping down to that kind of death cross area. So any thoughts on the SPY at the moment, Kay?
Yeah, I think overall the indicators are pretty bearish across the board. You can see that in put to call ratio. You can see that in the fear and greed. Now, fear and greed is not the only metric, but if the economy has become more bearish in terms of all the events that are happening, and White House is clearly coming out and saying, hey, they want to put all the bad stuff, if I for layman, right, up front, and then economy will hum from Q4. So if that is really going to be the case, and we will probably see a lot more pain, so that Fed can actually cut the interest rate. Because so far, what they have done is they have just slowed down the rolling off the treasury. They used to, I think, roll off every month, I think 25 billion. They have reduced it to 5 billion now. So when the next announcement come, most likely they will have zero. So basically, they are no longer going to issue any treasuries, and then most likely push for a Fed interest rate cut. That's probably, I'm thinking, is going to happen sooner than later. But I think there's more pain ahead. Maybe we will get a bounce. We won't like get a straight go down. We'll probably see a bounce, maybe some chopping around the market. Some news comes out. Tariff liberation day of America is coming up on April 2nd, by the way. So see how that plays out for the market. But it's going to be interesting, I say.
Yeah, I think it's worth noting we are just below the 200 moving average, which is never a good sign for a potential kind of reversal, kind of trend change in the market generally. We've tried to get back up there on kind of 3 out of 4 days there, but not quite managed to get up there. Now, of course, we can still plow above that because the market does what it wants, pretty much. Let's move on to the QQQs, if I can get the mouse properly. These ones are even more zoomed out, so I do apologize for the lack of vision here. But I've had to go back to try and see where the point of interest would be for me for potential downside. This one's a bit more dramatic. It's about 8% down to kind of 441 from where we are now. And we've got this kind of previous support area of support resistance area that we've had for quite some time now for the QQQ. Acting as a bit of resistance here, obviously within the last kind of 6 or 7 trading days. Lots of volume here on the right side as well. So plenty of room for the downside. And of course, as I mentioned before, that kind of bear flag kind of popping up there on the technicals as well. So, there is a chance we push above this and go higher, of course. But yeah, it doesn't look good on the charts, like you said earlier.
I think the earnings season is coming up again, right? I mean, it's funny to say earnings season is coming up, but in April we'll, I think, begin again with the banks and the Mag 7, and we'll see how they perform, especially for the rest of the year. Considering when we started the year, we were a lot more bullish. So we'll see how that plays out. QQQ is all about Mag 7 at this point in time.
Exactly right. We've got a few more requests coming through, to keep them coming. And we've got one here from the Investing Intellectual. We've got Apple, bit of a deep dive. It's KAYE's pick of the week. So do stay tuned for that. I'll probably get to that in a few minutes. But yeah, should we move on from the QQQ? It'd be interesting to
let's
see what happens this week. Always a volatile time. Always a good time for day traders. So my pick of the week this week is Palantir. Just a very, very simple 10% move, which is what I'm looking for. If we go above that, then that's fine. Great, wonderful, even better. If we don't quite make it, again, that's trading. Not the end of the world. We can always move on to the next one. The price action I really like around this sort of area in the last few weeks or so, because it's shown a lot of strength around this kind of trend line. And a kind of the 50 moving average. It's kind of played around it, but not perfectly. But I've left it on there for just kind of a bit of a reference point. Looks like it's kind of poking through there at the moment. But what I really want to say is this area of 75 to 85, top of my head, where it's obviously played within that range, and it's just really poking out a bit with a lot of strength in the last 3 days, in particular. So I like it to kind of move on back up to that psychological level of $100. And of course, we know what Palantir can do. It can keep going as well. So if you are looking for that, of course, trailing a stop loss behind it is always a good idea. But this is not a trade idea. It's not financial advice, of course. We've mentioned that at the beginning. But it's just something I'm looking at for sure this week. Any thoughts on Palantir, okay?
I'm not touching Palantir at this point in time because, we talked about this a couple of weeks when Palantir was having that massive bull run. I'm looking at this level of 66.21 if it's going to come down and touch it. Because I have a position at $20, right? $23.
So you're looking for long-term, aren't you?
I'm looking at long-term trade. There are just too many gaps it has created. So again, it depends on the exuberance of the market. If the market is in general weak, there is no way Palantir will run to oblivion, right? It's not going to happen. We may see bounces, so it's ideal for day traders. It's not ideal for long-term investors that you keep buying at all-time highs, because what will end up happening is your cost basis will keep going up if you started your position very early. So if it was when it was in 20s, 30s, 40s, it was great. It's based on my trading style. I don't find it very appealing because the risk to reward is not there.
No, okay, that's fair enough. I mean, but mine's a bit more of a short-term view on this one. But of course, the Palantir for a long term is hard to get into this, or even add to it. So yeah, I completely
It's
sympathise
ideal
with your
for day
opinion there.
traders, honestly. I mean, there's nothing wrong. I mean, on a day trading standpoint, you can probably have five, I don't know, you can have 5 trades every day. You can have a trade on Palantir, because you're getting in you're looking at charts for a minute, 5 minute, and you're probably scalping, right? Uh, that I'm not that kind of a trader. So
No, of course not. So, yeah, that's it really for Palantir. It's kind of my thoughts. It's a simple move from 90 to 100. It's a simple $10 move. And obviously, that's my pick for the week. We'll see how that gets on. My last week was 5% up. Sorry to mention it again, Kay, but I'm going to do that.
you want to Uber trade, by the way. So it's not. It's the funny thing is that both Nvidia and Uber is part of my 2025 stock pick. So not that I'm sad that you won, but
Yeah.
hands down, Uber did a much better job than Nvidia, no doubt.
We'll see what happens this week, won't we? You can find me on X, of course. I do kind of daily trading insights. That's always handy to have a look at that. And obviously YouTube, I've got a video coming out this Saturday coming as well around kind of how to trade, kind of strategy around kind of certain platforms, etc. And of course, we've got TTR as well, which is on the screen, which is my trading community, which you can access via a link on my X profile. It's right there in front of you. So go ahead and check it out. Check out the landing page, etc. And with that, we'll jump over to Kay's pick of the week.
All right. Okay, so let me also pull up my Apple chart on my side, and so that I can kind of see what I have done here. Okay, so a couple things. First of all, I have a bearish outlook on Apple, and I'll explain why in a second. But right now, Apple has come to a very critical position. This is the previous high. We're talking about June 2024 resistance. You can see this has been a very, very interesting spot, the $218, where we have seen bounces from this level multiple times, as have drawn that nice little circle. And what happened was that even though Friday was a pretty strong day, we were not able to decisively break that resistance. So we'll have to see this coming week if we are able to break that resistance to the upside and retest. Because unless that happens, even one or two candles, above that may not substantially give you confidence that Apple is going to be back on a bull run. We have already started a descending, lower highs. That's number one. And number two is that we have a big gap. It sounds crazy that it's a 19% drop from the current price. But the thesis behind is that the reason we had this massive run in Apple was because Apple Intelligence was going to be showcased or being launched in November of 2024, right? November? Yes, November.
Yeah.
With iPhone 16. That got delayed. And now they're saying it might not be available until 2027. Now, generally, if you follow Apple's trajectory, Apple never comes out with a new feature or new feature, right? They are always behind the curve. But every time they come out, most of the time it's a hit, right? They have perfected that technique. In this case, I think they probably got suckered in by they're behind the curve. They don't have any AI product, so they kind of launched that. There was a lot of talks on the executive shakeout at Apple. A lot of things moved around. So looking at all that, if Apple is not going to come out with any major product or service, why am I going to pay that premium to Apple? So that's why I have a bearish thesis on Apple. I actually had two bearish trade this week. One I closed with a 44% all credit spreads, and then one I closed for 25%, all day trading basically at that point in time. So I'm going to be day trading Apple continuously on the bearish side. Granted, unless we see a breakout and a retest at the resistance of 218. So that's my thesis. long term, I do expect Apple will be filling that gap at some point in time when the market actually takes a turn.
So I think my viewpoint from this is it's an interesting one because I'm a breakout trader. Kind of primarily, I like to trade breakouts, but you can also flip that completely as well. So you've got on the screen here 3 points of support, which would normally be the ones I look for as resistance. And then if you break that down, sorry, I've got some on my phone. If we break down from there and we come back up to retest that, as you just mentioned, so it's the same thing but just flipped. So as a technical trader mainly, then that actually looks quite appealing as a short. The only thing that slows me down really is because it's Apple. It's so big, it's harder kind of to have that kind of mindset of trading the breakouts with bigger stocks because they're so important to the market. It's not so bad with the smaller and the mid caps as well, because obviously they don't move the market too much, and therefore you can kind of trade them on their own. So that's the reason why I'm probably not going to get into this personally, but I will like to obviously track it and see what happens with the stock. If we can fill that gap, I'll definitely be looking to buy for long term if we do fill that gap. Like you mentioned, it is a bit dramatic, but these things can happen, especially if we go into like a short-term bear market. Obviously, with the 50 moving averages coming down through the 200 moving averages on the SPY and QQQ, never a good sign. So that will coincide obviously with Apple. And Apple may be the main driver of that move, still yet to be seen. But yeah, no, I do like the chart. I like the thesis. And the whole kind of logical side around it as well makes a lot of sense.
Yeah, so that's my trade. Again, this is not for the week. This is a long term, but that's how I'm playing it. And I'm mostly doing day trade using credit spreads, bull credit spreads mostly, and that's the plan. Sorry, bear credit spreads, but that's basically the plan.
Awesome. Where can we find you then, Kay?
Well, you can find me on X. I post pretty much every day over there. Some of the charts that I find interesting, you can find me there. YouTube, I haven't updated, but a lot more videos coming out in coming weeks as well. I think I probably will do a full video on Apple on my thesis, so that, and I'll explain with some examples as well, and you'll see a little bit more details on that. So if you want to find that, subscribe to that channel, and then I do a written form of analysis on Substack as well.
Yeah, if you did an Apple video, be sure to check that one out, because I'm trying to write down specific bullet points of what's really kind of breaking down the possible Apple price action. So it'd be good if you can do that one, Kay, for sure. Not that I'm pushing you or anything. Do what you want.
Yeah, no, absolutely. Next week, I do plan to record that video.
Sweet, awesome. Well, that's it for obviously the kind of main slideshow. We'll jump into the charts in just a second. Before we do that, I'll stick the thing up on the screen once again while I get the chart sorted out. Kay, I imagine you've got the lineup ready to go.
Sorry, yeah. The first one is AMD.
AMD, awesome. So yeah, obviously keep putting the tickers down in the comments below. We'd love to see them. It gives us a few more insights as well to what people are looking at, and hopefully we can help you with what you're looking at as well. Anyway, I'm just kind of rambling there a little bit. Here we go. Here's the charts. First one, AMD. Is that right?
Yeah, first one is AMD. Yes.
Wow, here we go. Not looking good, really, is it? Since basically October of last year. Big downturn, almost 50% actually, to where we are now, 40%.
Actually, if you think about it, they hit the all-time high in March of 2024. So it's been 1 year since the stock has been on a downtrend.
Oh yeah.
Yeah. It's crazy how AMD has been. I think I don't remember who, but it's on either on X or on YouTube. I saw somebody mention AMD as advanced money destroyer or something like that.
Yeah.
That fits perfectly here, especially with the AMD. And honestly, the chip companies have not done very well, but AMD has been the worst performer, I would say.
I brought up this box a few weeks ago on X with a little bit of analysis, and obviously this line about $94. Turns out, at least at the moment, that's a really kind of important point of a bit of support there. So if it does get back down to that 94 level, which it looks like it might not, or at least not in the near term, but we're breaking out this bit of a wedge. But yeah, 94 looks really interesting. So obviously got the buy there and the buy there. Of course, I missed it. Did you pick it up anything from 94-ish?
Yeah, I did add some at not at 94. I did around 105 or something like that.
Okay. Yeah. Awesome. That's kind of Apple. I mean, Apple, not Apple. Sorry, AMD. So, I mean, there's not really much else to say, really. It's below the two main moving averages on the chart, on the weekly chart, and probably even worse on the daily chart. Yeah. So it's got a long way to go, but this definite breakout of this wedge is something to keep an eye on for sure.
Yeah, and I think the overall the whole thesis about AI revolution and how expensive it is to add the data center, it's until that whole cycle, the narrative changes, I think we'll continue in this trend, at least until we see some massive shift in the AMD narrative, unfortunately.
Yeah. Well, still yet to be decided. What's next, okay?
Next one is a big one, Tesla. Everybody is talking about it.
Tesla. I've got this coming up to resistance. I posted about this earlier, actually, on X, around this kind of... I've got an apprehensive level around this area of 245, I think, to 263. I know you've got 260 in your mind, I think, from previous episodes.
I think 250 is also resistance, right? Because even though the Friday was a green day, we still didn't break that 250 level, right? We were below the 250 level, and there is definitely volume up to 258, 260. I would say 258 would be the ideal one. 258, 60 would be the one. I know that a lot of people are on Twitter calling it a bottom, that we had 225. I wouldn't be that sure that it's a bottom yet. Let's wait for the delivery numbers to come out. Unless Tesla really surprises, I think we may still see some more pain. But on a technical level, the reason most of the trading is happening here is because that's where the majority of the volume shelf sits. So you sell 10 15% on one day, and then you basically barcode the entire week and come up to the same level. That's pretty much it. That's what happened with Tesla.
Yeah, I mean, you've got a bit of a mini wedge here as well, but I've just drawn a couple of, obviously the low here and the higher low. So at least it did that. So obviously we filled the gap on 11th of March, and obviously came back down to try and fill it again. Well, not fill it again, but come down to that level again a week later. And of course, it didn't quite make it. So that's a little bit of a positive there for Tesla traders. And the other thing is this wedge as well, which I'll just quickly draw out. There's looking like it might be tempted to kind of break out of that soon if it was to kind of go to the upside. But like you said, I think it's got a lot of work to do. The thing is, if it does break in typical Tesla fashion, it'll probably break up to kind of $10, $20 straight away. So yeah, just keep an eye on that intraday move if you're into that kind of stuff. But yeah, it's definitely one to keep an eye on for sure. Long term, yes, again, it's tricky. But yeah, that's Tesla, I think.
Yeah. Next is Amazon.
Amazon's in a sticky place as well. I was looking at this one earlier. It's below the 200-moving average. However, it is still above my zone of 184 to 189. But if you flip out to the long term on the weekly chart, it is holding a nice support at the 50-moving average. We saw it back in August of last year, and it's happening again for Amazon. So it is a point of interest in terms of support for Amazon for sure. And these wicks look quite promising. So obviously the buyers are coming in towards the end part of the weeks to push up these candles. It just needs to get that push back above 200, which is obviously this bit of volume shelf here and its previous high from back here. I might just draw a line there at the 200 level for now. But any thoughts on Amazon? Are you adding for the long term? Or are you just sitting and waiting for this one?
So Amazon, I have not added more on long term. I already have a full position on Amazon from 2012. So I don't add more on Amazon yet. But there's a good range from 189 to 200. So it's kind of barcoding in that range, at least from the last 3, 4, 5, 6, 7, 8, 9, 10, 11, 13 sessions. It's been barcoding in that range. So it's an ideal candidate for a wheel strategy if you really want to run a wheel strategy. It's an ideal candidate also. You can, if you don't know how Amazon will behave, one of the strategies that you can apply is a iron condor, because what you can do is you may be able to pull off a small credit with the iron condor and be safe, so that way it's neutral, as long as it doesn't break your either ends of the condor basically. So definitely look at right now it's bar coding. So if you cannot run wheel strategy, which basically means buying 100 shares and then selling 100 shares, on the cheaper side you can use iron condor on this one, or a credit spread. So try that. I would say that that's a good way to keep collecting cash while we see the market behave, or at least we get a trend on market.
That's interesting options to take there, I think. Yeah, thank you for that, Kay. The other thing you can have a look at is the breakout trade from 200. But that requires waiting, a bit of patience there.
Yeah, I don't know if the market really has those breakout moments yet. I mean, the
You can pay
general
them in small doses, though.
yeah, I mean the general bearishness is you can see it through the fear and greed, right? That's what we are noticing. You may see a bounce one day for 15%. I mean, not going to happen with Amazon 15%, but I'm just saying
Yeah.
it's more bearish right now, the sentiments overall.
And you can, as we mentioned at the beginning of the stream, the kind of spiky QQQ charts, all of these kind of 50 million averages are curling over towards the 200 million average, and a lot of them are happening on the bigger tech names, and that's why people are getting a little bit worried, and that's probably why we're still sitting kind of in extreme fear. But of course, we've got to move out there eventually, so we'll see what happens this week for sure. What's next? Okay.
Next is Lululemon. So LULU. All right.
Earnings on Thursday after the market close.
Exactly. So earnings on Thursday, and we had a nice run on Lululemon. We are at this level. We are back down to what, 322. We had a nice run all the way to 424. That was back in February. So interestingly, when every other stock was actually declining, Lululemon was going up. Overall, this consumer confidence has been shaken, so we do see impact on Lululemon as well. The key event for the earnings is they raised the guidance last time. Will they raise the guidance? I mean, will they keep the same guidance or will they reduce the guidance? That's going to be the key. I think we may be able to see a bounce if they continue to reiterate their guidance, which is going to be raising. And if there's a change in that, I think we may see some more pain in Lululemon going down. But I'm in this long position trade for Lululemon. I got in around 265. So I let it run up all the way to 424. I did not actually change anything because I was hoping they will fill that gap going from 423 to 451. That was my trade. Did not pan out, but I don't mind owning and keeping Lululemon in my long-term portfolio.
It's interesting to say this is the weekly chart. It hasn't really moved since June of 2020.
Yeah.
Yeah, it's just amazing how kind of stocks do that, especially ones like I don't want to say cult stocks with Lululemon, but there's a lot of familiar customers and
it's similar to Apple, similar to Tesla. People are very brand conscious and people they stick to their brands, and Lululemon has a pretty big following as well. So but let's see. I think the key is how do they reiterate their guidance or not? That's the key basically for the coming earnings season.
So there's not really much point going into technicals, going into earnings, but as you mentioned, just the kind of gap through at 450 or 451, that kind of area. If we were to get a bit of a push up, that might be a point of interest for kind of future months. If we go down, then of course, you're kind of looking at this most recent low, or I say most recent, it's about 6 months ago, but the August low around that kind of 235 level. So there's kind of two levels to have a look at there for Lululemon for the longer term.
Yeah, and I think, and if Lululemon actually declines and goes back to 250 level, I think that's a good position to also start adding to Lululemon if you believe in the company and you like the company. Basically, that's where I first added, was 265 was my cost basis.
Awesome. All right, what are we on next?
Next up is the OKLO, which is reporting earnings on
tomorrow,
Monday. Yeah.
So massive run up, obviously nuclear related stock. We've got lots of volume around this area. Maybe I'll draw a little bit of a rectangle around that area. Do you trade this one much at all or not so much?
I have not. I have only traded OKLO once. So credit spread I did. But it was like last year when it was again running up. But I haven't traded it actually.
Volume seems to be getting slightly lower. Still obviously massive volume from October of last year.
I mean, still it's a it's not a profitable company, right? So that's to keep in mind. Their revenue is, I don't know, they reported $0 revenue. How is that possible?
Yeah,
Yeah,
massive.
on Seeking Alpha, it says the revenue estimate is 0 and EPS is -7 cents. So I don't know why that's the case.
It managed to move 550% in 3 months. So that's a testament of what kind of stock it is, without saying meme stock. But
They don't make any money yet.
no.
I wouldn't stay away from this company.
So you say it's basically
It's $0. You don't make money.
a high volatility
Yeah.
type of stock, and people just go and look at that hype stock basically.
At the
moment, anyway. On a technical level, it seems to be kind of reacting nicely around this kind of 25 level. But
yeah, if you day trade, why not? Sure.
Even a swing trade, a kind of shorter swing trade.
I don't know if I want to hold this stock that long enough, right?
You have a 3 or 4 day swing trade, can't you?
I mean, if you are confident, maybe a call option for Monday going into the earnings, right?
Yeah. Not financial advice.
YOLO it.
Yeah, I mean, I can't imagine the options would be that expensive, right?
So if you, let's say, buy a 27.5, it's going to be about $1.93. So $193, you'll get a call option expiring end of the week. But the problem with call options is that, the theta decay, right? Especially as closer to the expiration, you'll have a big IV crush. So
you need that move overnight on Monday, if anything, don't you?
Exactly. So if you make profit, then quickly get your profit and close the trade, because you can't hold it for long.
Exactly. But yeah, that's a possible outcome for Oclo potentially. Should we move on to the next one?
Next is Baba.
Look at that. So we broke out of the wedge actually on Monday, which was really nice to see. And then subsequently broke down since then. I mean, the HSI has taken a bit of a downturn as well. Maybe coming back to a bit of reality, perhaps. But I've still got this level of 115 to 120 for Baba as my interesting point. Maybe we sell it this week. That'd be good for me at least, because I like Baba long term, of course. But just needs to get down to this level for me to be interested again. I know you don't trade Chinese stocks that much, but is Baba one of those that you kind of like because of where it is and how it's situated within the Chinese economy?
Yeah, 100%. I think among all the Chinese companies, I think Baba is probably the most well-known company for non-Chinese, and I think it's if China actually provides more stimulus to their economy, I think Baba will definitely benefit. They came up with their own AI model like DeepSeek. It did not get as much traction as DeepSeek because the first mover always get that traction, right? After that, many companies came out with it. It did not get that traction. I think it's a solid pick. I just don't trade Chinese stocks that much.
Yeah, so once these kind of wedges have gone, I don't know if you play much towards patterns, but I do sometimes leave the lines on there. Just a little bit of kind of theory, I guess, around kind of trading. But I don't know if you draw your lines, do you leave them on the charts?
No, I delete them. Once I pass that time frame, I generally delete it and move on.
Because sometimes I find that this reacts again, especially on the smaller time frames, but maybe not now on the daily for Baba, but in the smaller time frames, I do find it reacting to kind of previous trend lines.
Okay.
Just a little kind of pointer there for the audience.
I try to keep my chart as clean as possible. It's when too many lines, I get confused.
Yeah. Yeah, no, I've been there before. Awesome. I think we covered that well on Baba. Yeah, points of interest, future growth. Yeah.
Okay, next up is Futu, Futu.
This is also Chinese, I think.
Is it Chinese? Let me see.
Yeah, I always forget what they do, but I think it might be fintech.
I think so. They provide digitized securities brokerage and wealth management products in Hong Kong and internationally. So yeah, I think it's Chinese. Yes, you're right.
This is a very interesting level, actually. So we've got this just on a technical basis, and Chinese assets, they do kind of trade within kind of technical more than they do fundamental. know all about that. But we've got this kind of zone between 105 and 130. I don't know if it's overvalued or anything like that. I'd have to do a bit more digging. But purely on a technical level, we've obviously got previous resistance here back in December of last year and early parts of this year, coming down, bouncing multiple times on this level of 105. But now we have the 50 moving average kind of coming into play as support as well. So it gives that kind of old favorite word, confluence, coming back. So there's a little bit more support there if you were to kind of, place a trade on or anything like that. Yeah.
So would you enter a trade at the retest of the 105 level?
Yeah, I mean anywhere here really, because the stock, the way it moves and how much it gains, etc. You're looking very, very, very minimal for that. I'd obviously aim for 130. So you've got 23% there, or even if you entered now, it's only 22%. So you've got a 1% difference. It's not too bad. So I just like to trade within the zones. So I would like to pick up anything from the 50 moving average to kind of anyway, kind of here. So anywhere between that zone, I'd be happy with an entry there. Where I would get stuck is obviously the stop loss would be down here. So the stop loss on these types of companies are quite large. So you're looking at probably about a 5% stop loss there, which is okay. It's not the end of the world. But that one comes down to your sizing. Are you sizing appropriately? Are you prepared to lose that much, etc.? Which is what you should always do before you get into a trade. Is kind of analyze how much you're going to lose, how much you're going to win, that kind of stuff. So yeah.
And interestingly, the last candle is also a doji candle. So mostly, there's an indecision on direction. Okay.
But no, I like this one. I'm going to write this one down actually, because it's an interesting setup. It's not my typical setup, but I like the confluence behind it. So we'll see what happens there for Futu.
Okay. Next up is Snowflake.
I'll let you do the talking on this one. This is your kind of bag. I don't know where to go. Do you want me the daily or the weekly?
Yeah, let's stick with daily for now, and I'll kind of look at my chart and I'll respond, and then you can kind of. So there is a long trend line that's coming from. Let me see, when did I draw that long trend line? It was from I guess back in 2021. So let's forget that for a second. We did have couple gap ups, right? We had a gap down all the way February of 2024. That's when we created the first gap down after post earnings. And then we created a gap up around the November of 2024. So right now, basically the stock is, I would say, trading mostly between those two gaps. Has anything come out yet? The earnings will come out, let's see, 5/22. So we have couple more months before the earning really comes out. And if we actually draw a long trend line all the way from 2021, that's a very long trend line. The stock is actually just touching that trend line. And it has been rejected a couple times. It is slightly peaking on Friday, just peaked above that trend line. If we see a rejection at that level, we might actually go and fill this gap up that was created after November. Overall, I think the SaaS market and the thesis behind it is that when we entered 2025, the companies were very positive that it's going to be a home run. But now I think the companies are starting to realize that because of all this tariff uncertainty, they don't want to spend money. And we are seeing that in some of my clients as well, that they don't want to go ahead and purchase software. So they are kind of slowing down on, it's more of a wait and see. I would be very interested to see how things proceed in the next earnings, if we are seeing any impact on the sales cycle for a Snowflake. But it's a good place to be in right now. I think I have a long-term position. I still think Snowflake will outperform this year as long as this tariff uncertainty is kind of taken care of. Because the problem is, when you have tariff uncertainty, companies will not invest, whether in human resources, whether in buying products and services, or even digital products. So that's a key here.
We're completely flat on the year, aren't we?
Yeah.
No, I like this one. I mean, you mentioned the two gaps, and they're actually represented here on my chart by the two green lines. So down here and obviously up there. And I don't know what this line represents, but I remember us talking about it a little while ago. But I think it's really nice that we've got a bit of a bounce here, at least from the 200 moving average and the previous support and resistance. What I would like it to do actually is to come down again.
And fill the gap.
Yeah. I don't know if I wanted to fill the gap as such, because it's still another, what's that, 20% from here to there, maybe 15%.
Yeah, let me tell you that.
15%.
Exact. No, it's actually gonna. If it fills the complete gap, that'll be about a 21%.
Interesting.
Yeah. We could see a bounce on the 200-day.
Yeah, exactly. That's why I want. That's why I'd look to get in, or at least start a position. Because even if you have a starter position here, potentially, if it does drop down to kind of 133, it's not the end of the world. You can just add to it, and then obviously it gives you a little bit more kind of confidence with that trade if you're filling the gap. And we've seen it with Tesla recently. Gaps do fill, and they kind of do bounce at those gaps as well. Not all of the time, but of course, it is worth noting that quite a lot of the time they kind of do bounce from those gap fills, whether it be positive or negative. But yeah, I like Snowflake. It's constantly on my watch list, but I haven't yet pulled the trigger because it's just in a bit of no man's land at the moment.
Yeah, it's a no man's land right now.
Yeah.
There is not a clear direction. It's basically barcoding at this point in time, and there isn't any catalyst. Overall, there's a negative sentiment on the market. So, yeah. Next one is Confluent, CFLT. It's a nice little bounce off the 200-day moving average on Confluent.
Yeah, we had a drop below it recently on the 10th and 11th of March, but it kind of quickly bounced back above that. Kind of trading around that area now. What it does need to do is get a bit of a push from here back up to kind of 29, which I think will coincide with the 50-moving average as well. I forget what they do. Are they a SaaS company as well?
They are a SaaS company as well. They are also in this whole segment of, let me see, let me read it out.
I see that's why Money Managed brought all of these up.
Yeah.
They're all SaaS companies, I think. So slowly getting through them. But yeah, I mean, this 200-moving average definitely is a point of interest. We'll zoom out so we get a bit more of an overall look at the weekly chart. So I imagine it's probably in a range. Yeah. This looks like something we've touched on before in this range between $18 and $34. Very interesting. Sat right in the middle at the moment.
Yeah,
but we do have some higher lows as well. Sorry, Kate, just to
go ahead, go for it.
We've got some higher lows being set potentially here as well, which is good, going into a resistance for sure. And then what we want to see is a break of resistance. Just really simply break of resistance, come back down, retest it, and then move higher. That's kind of how I look at kind of trading. Not so much on the weekly timeframes, but more of a shorter timeframes. Sorry, Kate, go ahead.
No, I think you hit the nail on the head. And I think that the range that I would say we basically will be probably barcoding would be between the 20 SMA and 200 SMA. So both 20 will be acting as a resistance and 200 as a support. This is where the point of control is with majority of the volume shelf. If we actually break the 200, that's when we might actually come down and retest the 22. That's where the next big volume shelf starts to build up. 22, 21, 22, that level.
Yeah.
So it's so this is a critical level for Confluent to hold 200-day and actually show some strength. But it won't be easy to break your 20 and 50 SMA resistance as well.
I think this one came up last week. I don't know if it's the same person, but it's interesting to see that it basically hasn't moved from last week.
Yeah.
Because that was last Friday's candle there. You can kind of see that. And we're literally at the same point exactly. So it hasn't moved all week, which is a good sign and a bad sign. I mean, it's not that much exciting, but at the same time, it hasn't really reacted too much to the market. So
yeah,
good, pros and cons.
Yeah, and if you're looking for a long term, I think breaking the 200-day SMA and retesting that to 22, 21 might interest you to add to your position. Next is MongoDB, MDB. That's also, I think we have been getting Snowflake, Confluent, and MongoDB as a package for the last couple of weeks now.
Yeah. I can see what he's interested in, or he's interested in. This one, again, I mean, we've been this one up quite a lot, but it's still just kind of trading within this kind of downward channel. I think we mentioned last week, or at least I mentioned, because it's on my chart, that 141 level from previous support back in the turn of 22 and 23-ish. So it's not been kind, this price action, has it?
No, it's not been kind. And I think the person who requested it, I would highly recommend that you check out the earnings. I believe the guidance was poor. And you might want to actually hear why they are providing a lower guidance. I think that would be the key. I mean, at this point in time, because they have created this nice gap down, I wouldn't be surprised if they actually go back and retest the 156 level, which was your support, right? Maybe not 166, maybe 165.
141.
165, yeah. That would be the that was the pricing around when 2023 January. Wow, that's
Yeah, so that area of kind of 140 to 160,
yeah.
that kind of zone, shall we say. I'll draw a little rectangle there so people can kind of see what we're talking about.
Yeah.
Somewhere in that kind of area there. And this is the weekly chart as well. I always like to look out on the weekly charts before we jump into the daily charts. Yeah, I mean, it's not really one I like to trade or look at all, to be honest. But I hope we've helped out there for you, Money Manage. Any more requests here? We've got one more, or two more.
We have two more. Next is TEM, Tempest AI.
This one is constantly in the news. I think it's related to Nancy Pelosi. I think it's related to AI. I think it's related to healthcare.
It's definitely with AI, because it's AI is in the name, Tempest AI.
Well, yeah, that helps. I didn't even read that.
It's a healthcare technology company. It engages in providing next generation sequencing, diagnostic, chain reaction profiling, molecular things that I don't really follow much. So, it's it's like those Cathy Wood's ARK Invest, genome and all that technology that's going to change the world. Hasn't changed in 5 years yet, though.
Not yet, but we do have a gap fill at 36, and I think we've had that line on there for a few weeks. I think that's a point of interest for people. I know you like a gap fill, but if even that gap does fill, are you looking at this, or are you just passing it on and moving on to the next?
I tend to not trade these kind of names.
No,
if everybody's talking about it, I don't want to trade those names, honestly. So, also, I don't understand what they do.
Yeah.
And the problem is, like, if let's say you are trading for, I tend to trade the same tickers mostly. I don't try to add more tickers, because when you trade the same tickers, you kind of start to understand the pattern in which they trade.
Yeah.
And it is very important to get those patterns right. If we keep adding more tickers to your portfolio, then what ends up happening is then you get too distracted. So that's why I stick with max 7 tickers most of the time. I will add some other tickers that I personally use, but I don't trade too volatile tickers. It's difficult for me.
Yeah, I think with day trading, for me, I literally only trade the US 100, which is the Nasdaq futures. I don't really day trade anything else, just because it's nice and simple. It keeps me in the zone in that one particular asset. And two, like you said, I'm used to it kind of moving in certain ways and reaching certain points, especially technical levels, and reacting how it reacts. Obviously, it's not always the case because it's trading. It sets candles. They do whatever they want. But yeah, I'm comfortable trading that, at least at the moment. Who knows? Maybe in the future I'll check out oil or something, or gold or something like that. But for now, I'm happy trading the US 100 on the day trading basis. Obviously, swing trading is different, but yeah.
Yeah. Next is Broadcom AVGO.
And this, I think, is our last one. So
yeah, we don't have any more requests, so that's a wrap for us.
Nice. Awesome. So Broadcom, we're kind of floating around that 200 moving average again. I think again we've had this one a couple of weeks ago. I don't think we had it last week.
No,
a couple of weeks ago we had it.
Yeah.
Still trading kind of within this kind of descending triangle, as I like to call it. But yeah, the 200 moving average is nicely there underneath it. Reacted well a couple of weeks ago. And obviously the 182 level, which we've got that yellow line flowing through the screen, is previous resistance. So that kind of area is about previous resistance as well. So lots of support underneath it. Just needs to make that move back to that kind of trend line above, which at the moment would be around about $208 to $213. What's your take on Broadcom? Are you trading this one, or
I do trade? Yeah, I do run wheel on Broadcom a lot of times. I think I'm actually waiting for the breakout above the 20 SMA. The stock has been trading under the 20 SMA since 224. And it has not been able to break it. We did touch a couple times, but on the daily, yes.
Yeah.
And of course, you mentioned that we do have a prior resistance of 184 that would be a support, and then the 200 days slowly creeping up to that level as well. So that's a good support. I want to see if we can break the 20 SMA. If not, so that I can find a range on where I can run the wheel strategy on. It's on my watch list. I haven't done any trades on Broadcom lately, though.
It does have a bit of a bear flag, like a lot of the market at the moment, a bit of a bear flag kind of going forward at the moment. So you've got that there, you bring that down lower. So there is always a chance that it breaks down below, but that's when that support that we've been talking about, both of us, that's when that really comes in handy, and then maybe that might set a bit of a double bottom perhaps. But yeah, just a bear flag to worry about there, I think.
Yeah, I mean, also, if you are super keen on running options, then the one idea I would give is look at least 30 days out on the expiration. And I trade 30 delta, but in this market, I think you can probably drop it down to 15 delta. That way, you will get less premium, but you have a lot more downside protection. So that's something you can think about as well if you want to do wheel strategy on it, or even do credit spreads. That could be much tighter with a $5 spread. Yeah.
Sweet. Well, that's a wrap for this week's edition of the Audience Request. Obviously, come back next week with all of your requests if you want to see them at that particular time. Obviously, it's not great times in the market at the moment. It is a little bit kind of negative, but of course that we can trade through any sort of market conditions. But yeah, thank you once again for Wolf letting us use the platform. We really, really appreciate it. Of course, you can get us on YouTube as well on the Trading Triangle. So do head over there. We're going to do a few more bits in the next coming months, which we're obviously thoroughly excited about. Are you going to close us out then, Kay? I'll let you have this one.
I think you hit the nail on the head. It was a good session today. I think it's an interesting phase of the market, right? Whenever you are always in a bull run, everybody, basically you can win most of the trades in a bull market. I think when you have this kind of an uncertainty, I think it also helps you to polish your trading skills. Yeah. I actually picked up a couple strategies that I was not using it when I was having a bull run, right? You can just run the same strategy again and again. You can still make money. But this kind of environment helps you to get better at your trading. Of course, always size your, do a good risk management, size your positions well within your risk management profile, and I think it'll be good.
Yeah, risk management and psychology is definitely the two things to focus on. You can worry about entries and the kind of execution. That's a different ball game. Anyone can do that. But you can manage your emotions and manage your trades, then you're definitely on to being a successful trader for sure. I think we'll close out there. So yeah, we'll see you same time next week on a Sunday, of course. Take care, everyone. Trade safe.